Welcome to Monthly Talks, part of the Elite Talks podcast series by Securities. Each month, we'll take a moment to sit back, look at what's been happening in the market, share real experiences, and find a little inspiration for the next stage of our investment journey. This is our second episode, and we hope you'll catch some bright spots as the market heads into the home stretch of the year. I'm Manan, and I'm so excited to be here with you in this episode as we take a look back at the latest developments in both the global and Vietnamese financial markets. Joining me today is Ms. Lien, Head of Research at Securities. Hi, Ms. Lien. Great to have you here.
Hi, Mingyang and every audience. It's a pleasure to join today's conversation.
Surely the biggest good news in October is that Vietnam has been officially upgraded by FTSE Russell to secondary emerging market status. This can be considered a historic milestone for our financial market, right?
This is a major step forward, as Vietnam has met all 9 of FTSE's stringent criteria. The upgrade not only elevates the position of Vietnam's stock market on the global map, but also paves the way for an estimated $900 million in ETF inflows. In particular, large-cap stocks such as VIC, VHM, HPG, and FPT are expected to see strong net buying, creating a positive ripple effect across the broader market.
Some investors have expressed concern that the upgrade process announced by FTSE will take up to a year, with Vietnam needing to undergo another midterm review in March 2026. What's your view on this, Ms. Lien?
The one-year timeframe and the midterm review in March 2026 aren't new obstacles. They're simply steps FTSE uses to verify the stability of Vietnam's recent reforms, such as the non-pre-funding model, failed trade handling mechanism, and improved accessibility for global brokerage firms. If these reforms continue to operate smoothly, this timeline will actually enhance Vietnam's credibility and reduce the risk of a re-upgrade reversal. In other words, it's a chance to consolidate and perfect our progress, not a systemic risk.
While the domestic market is celebrating, things across the Pacific Ocean are taking a very different turn. The U.S. unexpectedly entered a government shutdown right at the beginning of October. Could you help our audience better understand the impact of this event?
After 7 years, U.S. government has once again been forced into a shutdown due to a budget deadlock. Hundreds of thousands of federal employees are on unpaid leave, and many public services, from passport processing to business loans, have come to a halt. In reality, markets didn't react too strongly to the news. In fact, major U.S. stock indices rallied to new record highs. However, the event continues to highlight the deep political divisions within Washington and could influence the country's upcoming policy directions.
Amid these uncertainties, U.S. monetary policy has drawn even greater market attention, especially the Federal Reserve's interest rate decisions.
Exactly. Fed cut interest rates by 0.25% in September and is expected to lower them further in the final 2 meetings of the year. The U.S. dollar has weakened, while gold has surged past USD $4,000 per ounce, an all-time record high. This clearly reflects how global capital is shifting towards safe haven assets amid heightened uncertainty.
While the world is grappling with multiple risks, Vietnam's economy has just delivered a remarkable quarter. Q3 GDP grew by an impressive 8.23% year-on-year. What are your thoughts on these newly released economic figures, and which aspects do you think investors should pay the most attention to?
Vietnam's GDP grew 8.23% year-on-year in Q3, the highest rate in over a decade. The industrial and construction sectors posted strong growth, serving as key drivers of the economy, while services expanded by 8.6%. Notably, FDI disbursement reached a record $18.8 billion in the first 9 months, reflecting continued confidence from foreign investors in Vietnam's prospects. However, it's also worth noting that exports remain heavily dependent on the FDI sector, while domestic enterprises are still facing significant competitive pressure. In September, Vietnam's CPI rose 0.42% month-over-month, bringing the 9-month increase to 3.27%, which remains within the government's control range. Retail sales climbed more than 11% year-over-year, underscoring that domestic consumption continues to be a key growth pillar. On the policy front, SBV sold over $1.4 billion in forward contracts to stabilize the exchange rate, keeping the Vietnamese dong around 26,300 to 26,400. In our view, the SBV is likely to maintain a positive swap position in the near term to ease FX market pressures, meaning Vietnamese interest rates are unlikely to fall significantly further.
From what I've observed, the stock market seemed to lose some momentum in September despite earlier optimism. What are your thoughts on this, and how do you see the market's outlook in the coming period?
In September, the VN index fell 1.3%, and market liquidity dropped from a record 55 trillion Vietnamese dong per day to just over 37 trillion Vietnamese dong per day, with Vingroup stocks serving as the main support for the market. Investor sentiment turned cautious ahead of the upgrade results. Meanwhile, foreign investors continued strong net selling, pushing their ownership ratio below 15%, the lowest level in the past 5 years. Key reasons include exchange rate pressure and capital rotation toward markets such as Japan, South Korea, and China. As mentioned earlier, global capital flows are shifting away from risk assets. Now that FTSE has made the official announcement, we believe foreign inflows will soon return. At the same time, Q3 earnings results, expected to be released in the second half of October, should provide fresh momentum for the market. With the PE ratio around 15 times, well below the 18 to 19 times peak seen in 2021-2022, we believe valuations remain quite attractive.
So, looking ahead, which sectors does PHS recommend investors should focus on?
As I mentioned earlier, Q3 earnings results will be released throughout October, and overall we expect them to be quite positive, especially for sectors such as banking, securities, and retail. The banking sector faced selling pressure in September, but with credit growth reaching 13% as of September 25th, this group is likely to post strong profit growth. Key tickers to watch include TCB, HDB, and ACB. Although market liquidity dipped in September, it had reached record levels in July and August, supported by high margin utilization and the upgrading momentum. In addition, the upcoming TCBS listing and VPBS IPO in October are expected to boost sentiment across the securities sector, with standout stocks such as SSI, HCM, and VCI. Lastly, the retail and public investment sectors remain two major pillars of the economy, with notable names including MWG, MSN, and HPG.
It's clear that October has been a month of mixed emotions, joy and pride at Vietnam's market upgrade, yet caution amid global challenges. Opportunities and risks always go hand in hand, but overall, Vietnam continues to make the most of this environment to move forward with confidence. Thank you, Ms. Lian, for sharing such insightful perspectives with our listeners today. And thank you to all our listeners for tuning in to Monthly Talks. If you found today's discussion helpful, don't forget to subscribe so you won't miss our monthly episodes from Fuhong Securities.